I'm going to jump right back on the VIX, John, because we did hear from so many people that really follow it. No, they don't. And they talk about it a lot. No, they don't. But anyway, when you look at the VIX and you go back 9 days ago and it was trading 65 in the pre-market, and then all of a sudden you just see this cascading down, that's kind of what you should expect. All you got to do is go back, take a look at the charts, and you see spike, and not very long after, it pulls all the way back, and sometimes even pulls back even further. A great example of that is today, John. Do you know where that VIX is right this moment? 1650. Now, this is the same VIX that we were talking about at 30s and 35s most of last week. Started to dip down into the 20s, broke under 20. Yesterday, 19s, let's call it. Today, it was starting in the 17s. Here we are at 1650. So it does show you a lot. I will point out one thing, however. On August 7th, 50 cent was at it again, so we need to be careful. The volatility index was trading about 2230. I bought 95,000 of the October 16th expiring, the 50 strike calls, 5-0. So this is another one where it's very interesting to see that type of a trade. Doesn't mean he's going to be right. He's right pretty frequently, but it doesn't mean he's going to be right, or she. But the reality is there. The volatility index still has a little bit of a potential activity into the future. And that we're talking about is all the way out to October. So it's a long ways from where we are right now.
Certainly is. But 50 cent, the timing isn't always like that. Right. But if that trader, man or woman, is actually rolling down and getting into position to protect or bet on a market swoon and or a volatility spike, because they kind of go hand in glove, that's something that we should all pay attention to, because this last trade, Pete, they only made between 70 and $100 million.
Is that
on
all?
That. That's a real trade.